Matthew Mowbray, and welcome to Justice Outside the Box podcast. And today with us is Neil Blue, CPA, investor, entrepreneur, extraordinaire. And today we're talking about accounting and family separation. Thanks for coming, Blue.
Thanks for having me, Matt. It's always great to see you. And I'm looking forward to talking about some of these things today that are really important.
So, in starting out, when we talk about family law and how accountants are involved, really basic question I'd have is, how do you choose an accountant?
Well, that's a really good question, Matt. I think in the beginning, obviously, you're going to want to probably reach out to the current accountant you have, and you're going to want to try to meet with them, make sure you understand if they charge hourly rates, and understand that they also have a professional obligation to both parties, which is a little bit difficult to maintain. So especially if you're the spouse that isn't so involved in the family affairs and in the finances, they're going to perhaps have a bias to make sure that they're taking care of the person that owns the business or has more dealings with them. So I think what's the first important thing is when you go to the office is try to find the partner who's involved and then the managers involved, and try to ascertain from them like who deals with my stuff and who is the best person to talk to about my file specifically, because it might not be the partner on the file, it might be the manager. And from there, you can go and collect a lot of the information, maybe have a meeting with them. Afterwards, then it's really up to them to make sure that they're communicating to you that, there is somewhat, especially if it's in a difficult divorce or an ugly divorce, that it might be best that you seek outside accounting advice, third party, and that might be worthwhile just to make sure that you're getting proper advice. And the accountant, the CPA, hopefully it's a CPA you're dealing with, would be required to give you a few different resources or give you some referrals to some other accountants who they know are strong. And then from there, you'd be able to maybe give them quick calls, ask them, like I said, hourly rates, how much they would want to review this, how much their fees would be. Find someone that you like and you feel comfortable with, and maybe ask them if they have been involved with clients who have been divorced, and if they're used to the different laws and rules that are a little bit different when you're going through a divorce.
And so I know when you're talking about, kind of sounds like conflict of interest rules. And I know as a lawyer, we have those so that we can't represent two parties with competing interests. And I can certainly understand how accountants might have the same one. So, we're not going to apply this tax deduction to this party and not to this other party, which could create a conflict for them. Is that the same thing they have to deal with?
Well, I think that I'm not sure if it's a written rule, but I know that the way that I handled it in the past was that if there was a divorce, the person, as soon as there was a separation, they would have to work with a different person in the office, just to make sure that they're getting the best advice possible. Obviously, when you are talking to your client, your one client, you might be explaining to them, for example, I would suggest you wouldn't be giving for sure investment advice, but you would be telling them, okay, well, these assets, these are the values of them. When you take into tax considerations, when you take into time value of money and other things like of that nature, then you're going to see them at a different value than you would perhaps matrimonial home. And so it might be wise for you to at least be talking to someone different in the office, because they're going to say, well, if you give up on getting custody of your child, you're also giving up the eligible dependent credit. You're also giving up the fact that you're paying for tuition fees that you would be able to deduct on your tax return. So you're now giving up quite a bit of money in other ways. And so it's important for the person who is on the other side, so to speak, that they are looking at talking to someone else first. And yeah, you're right. It is a bit of a conflict, because as an accountant, you're always trying to do the best for your client. But how can you do that if they're both on opposing views? and they both have different interests and things that they want, right? So it is kind of a difficult situation, whether it's a written rule or not. It's something that I shied away from, and just make sure that people understood as soon as they talk to me, hey, I'm going to do my best to make sure that you're getting good advice here, but we do have other options for you, is how I approached it.
So I know, like, for example, I've had sometimes, especially like real estate contracts, where like, well, can you just act for both of us? In that situation, what I'll do is I will write a conflict of interest letter that says, "Hi, you realize that I'm acting for both of you. That any information you provide me is um, disclosable to both parties, and so there is no confidentiality between them." Uh, is that ever something that you would do as an accountant? I know one other thing, sorry, that you had just mentioned before is you had talked about an ethical wall as kind of how I see it. So, like, here's one accountant over here and one accountant over here, and here's this wall in between them, and information can't flow between them. And that's how we kind of maintain their ability at the same firm to access information and restrict information.
Yeah, that's what I was kind of referring to previously, Matt. Is just that separation, right? Making sure that they have their person. So when they phone in, they need to talk to this accountant specifically, and it's noted in their file, and vice versa. So you need to make sure that um, there's enough information readily available for your staff to know that, oh, hey, if this person phones for information, don't just give it out, right? Because on one side they might be looking for this sort of information that you might not be willing to provide. The one accountant might be not be willing to provide, um, as that happens in divorce, right? So you need to have that separation to make sure that, okay, yeah, we are making sure that everyone is not getting information that they shouldn't, or that they're getting the right information that they should. So, and that's why it is kind of better at some point that maybe after the first year is always easier. Just to, I find they really want to stay for the first year because it's just easier. But then after that, it's really important to just find someone else to handle those tax returns for you.
Yeah, when you talk about that time of separation, right? So they're both filing jointly. So you kind of have the years pre-separation where they'd have access to all that information jointly because they're both filed jointly. And then there's that sort of year where they've separated, and then there's the following years. And so as you're saying, I can totally understand where the year that they separate, they're just going to file jointly or do something together to just get that done because it's easier. They don't have to go and find new accounts. They don't have to go and restart the process. But those following years, when they start filing separately and divergent, then obviously, as you're saying, they don't have access to that information from the other partner anymore. Is that kind of
Right. Yeah, exactly. Yeah. Yeah. I think that yeah, exactly right. I mean, it's very easy. They already have represented client. You've already signed the authorization forms. They have your full history, right? They know everything um, in your past, right? They know you've probably gotten to know it, as many clients do. They get to know their accountant a bit more. They're asking them very personal questions. So they have the understanding of what your children are like, if you have any sick people in your family, is there any disability tax credits, do you own a bunch of rental properties. They have all this information, so it just makes it so much easier in the first year. But once again, once you leave, they will provide all the information from all your returns that you want, so that the next accountant you have has a full understanding of what's been occurring, right?
and then obviously as an account too, if someone's, that that these parties have separated and they say, "Hey, I want to do this," which you think would advantage one of them over the other, you'd have to disclose that, right? Or you'd have to tell them no or something along those lines.
Well, that's why it's almost impossible for you to operate on both sides, right? Because if, for example, you're working with a client and they say, "Well, yeah, they're just willing to walk away from all these assets," you're going to say that's awesome, or they're willing to do X, Y, Z. You're not really going to advise them as a CPA on the divorce process itself. That's why you have lawyers and whatnot. But you're certainly not going to try to sway them the other way. They might phone you and say, this is kind of what has happened. And, I would say I would probably go back to your lawyer and discuss other things like X, Y, Z. Um, and if you're representing both, you're not going to do that, right?
Well, yeah, that's exactly it. But I think sometimes, especially because, separating can be such an emotional issue with people and can be very traumatic. They've been together for 20 years, they've had kids together, those kids have grown up, they've moved houses, started business, failed businesses, and they, and separation can be very challenging. And so, this is an accountant is just one of those professionals that they've relied on for so long, and now they're just trying to adapt that or convince that accountant to join their side of the dispute between them.
Exactly. And then, it is also in some circumstances, right? The accountant had forward knowledge, sometimes that can be done, right? Where trusts have been set up and maybe the spouse isn't aware of all the different assets involved, and they've done some planning beforehand to try to move things around to make it complicated to follow, right? So sometimes the accountant already knows that the divorce is coming before the partner does, right? Because they're coming to you, things aren't very good, it's a little bit rocky, is there some things that I can do to help myself in the case of divorce, right? That happens, right? So you also have to think about that, right? Whereas they are going to be giving them good advice for that purpose. They have signed engagement with, say, XYZ corporation to give the best tax advice. Um, Now, although there is very little, as you know, Matt, that you can do, but it can make it difficult if you don't ask the right questions, right? Yeah, just with that being said, um, it's important. It just furthers my explanation of why you should be potentially moving on, especially if there's a lot of assets involved. They might have already been working with their accountant beforehand.
And then obviously it makes it even more challenging if they have the accountants doing their company, but also doing their personal income tax returns. Um, and so, no, I think again, knowing your accountant, and then so here's the question. Then, so you're the client, you're going to your CPA accountant, and you're in a separation. What questions should you ask your accountant um, at that point? What do you think would be most useful or functional?
Yeah, and I think it's not even really about the price. Like, you might be asking about what's your billing rate and other things like that, but really I would get down to business and just send them a list of what information you require, right? So evaluation, and they're not CVVs generally, so they're not going to have a value potentially of assets, but they might have the adjusted cost base, right? The actual purchase documents of various assets on file, um, that can give you an idea of of all that information. They might have the ACV of certain assets predecessing the marriage that they might be willing to share. I'd be asking about um, getting information on whether they'd be willing to share with you their general ledger of businesses, um, any organization charts, if possible. Um, that's probably where I would start off with them, is just seeing what they would be willing to provide off the hop. Obviously, they have uh, confidentiality, so they're probably not going to supply anything unless your significant other or your ex partner is going to request that information to be sent over. So, might be wise for to it. Hopefully, it's on okay terms, and you can ask that for them to ask for that information for you. Um, by getting a hand on all of that financial information, prior tax returns, prior financial statements, prior general ledgers, it's going to give your new lawyer a better chance of actually getting a full financial picture of all the assets, right?
Well, I know, and the other thing too is like, for example, there's something called a notice to disclose, and so they're required to disclose their last 3 years tax returns, the last 3 years notice assessments, their last three pay stubs. If they get income through a trust, if they get income through student loans, if they get income from the government, if they get income through a partnership, provide their corporate last 3 years corporate financial statements if they own more than 1% of a company. Provide their last 6 months credit card statements, the last 6 months of bank statements. So all that's required to be provided. And I'm sure, depending on how sophisticated that individual is, all they do when they get that is they're like, hi, Neil, I need this information. Can you send it to me?
100%. And we have it all on file. So we just send it, right? Usually on PDF. So you're absolutely right. You get those. Hey, I need last 6 months of information. Oh, is everything okay? Yeah, no, I just need it for my lawyer. That's usually how it works out with when a client phones like that, right? So you're absolutely
Yeah.
right.
No, and again, so like, but I think a lot of people what they don't understand is kind of how that byplay works, right? In the between the different professionals and how that runs, especially through this process. Um, Going kind of in a different direction, I had another question for you. So when people separate, uh, they can actually claim certain things on their tax returns. Like I know one of them in, I don't quite know what the section is, but it was child support or spousal support, but not property or divorce or parenting.
Yeah, it's one of the ones that is often missed or overlooked, and it's one that I think can actually be quite a bit of money, right? Especially if you're trying to collect spousal or child support payments. Um, those fees, if they can be separated and identifiable by your lawyer, you can actually deduct those on your tax return. Um, which, as you know, Matt, divorce, if it's ugly, can be very expensive and very high legal fees. So even capturing a little bit makes a big difference. And it's something that's, I think, overlooked by a lot of accountants, mostly because it's sometimes hard to deal with your type, Matt. Um, and then also the other one too that you have to keep in mind is um, fees to collect pension or other retirement allowances. Is those legal fees can also be deducted as well. So there's some fees there that you can deduct on your tax return that can make a significant difference for you. That should be noted that that's only on it's the legal fees that you pay in order to collect, not if you're protecting yourself. So this is only for the person that's going after the payments.
And this is something that I send out to my clients, or I try to let them know in like January of every year. Hey, look, this is something that you can do. As a lawyer, I find sometimes other lawyers are reluctant to say, well, what percentage of your overall matter is child support and spousal support? And as you're absolutely right, to try and collect on child support, spousal support, not to defend against it. And it gets even more complicated when you talk about shared parenting or split parenting, because you can't do it for shared parenting, because you both are paying and both collecting. And so only the party that's receiving the greater amount is likely someone that can actually collect again it. Whereas in split parenting, and that's where parent A has one child and parent B has one child, they can actually both collect their legal fees, is kind of how I understand it.
Yeah, that's a really good point, Matt. And it's also confusing on the accountant side. Like you have to make sure that they understand exactly where things lie. Like obviously sometimes it's hard to say who is going to get um who is going to end up with the children, right? Sometimes both are fighting for full custody, right? And so then it becomes, oh, well, I don't owe this child support because I'm fighting for custody, right? And I'm going to win, right? And then there's legal ramifications, right, that come through later. So yeah, just furthering your point, it it can be a little bit tricky for the accountant, and you need to make sure that you're communicating with them clearly exactly where things are at.
You mean so kind of like me as a lawyer, clients don't give you all the information that you need right off the bat?
Well, yeah, exactly. They never give full information. And that's also because they just don't understand as well, right? Especially in these situations. Like most accountants don't even understand what's going on. Um, it's complicated and it's really stressful. And so when people are stressed, they forget things very easily. And so yeah, like a lot of times it's like, oh yeah, you think you have a full picture of what's going on, but they've only given you a partial of the picture, right? Very small component, and so you don't know where things are at. And it's a hard conversation to have too. Like when I was in public practice, I would have a really long detailed questionnaire, and I would ask some very personal questions of of um of my clients, and that was just so that I understood exactly where everything is. But most accountants don't do that, right? And so you don't have, it's hard to have a full picture, especially in these cases. If you're getting divorced, hey, how's it going? Asking, they should be asking, how they're doing, how's it going, are you going for custody, are the kids living with you? Because also all those things actually affect whether you can, you know, take an eligible dependent, for example, whether you're going to have those tuition fees, whether you're going to have spousal supports or child support payments. Like, I would ask those questions in a way that it doesn't seem so direct, but to get to the bottom of it, you need to find an accountant who's going to ask you those questions.
And again, I think that just goes to the accountant's competence, right? So when they're asking those questions, it's because they want to understand the full picture, so they want to be able to help you and give you the most proper legal advice.
Well, yeah,
Legal
and I think,
advice, accounting
good
advice.
term, accounting advice. Yeah, well, obviously we can't give any legal advice, but we're trying to give the best advice we can within our parameters. And I mean, a lot of firms are just not set up for personal tax, and that's just the way it is, because personal tax just doesn't make as much money as corporate tax. There's just so much more money in corporate. So when you look at some of the big firms, what type of advice, your first thought is, oh, I'm just going to go to the big four, they're going to be the best. But I don't know if that's necessarily true. Not for the cost versus benefit. You might be paying $1,000 an hour, or $900 an hour to some person at big four. Is the value there when they can only spend a little bit of time with you? It's probably best with someone who actually commonly does personal tax, right? So it's like the competence, they might be a really competent person, but they might just be more often than not involved in corporate tax. A lot of accounts don't even do personal tax anymore. They farm it out or they get rid of it. They're just not interested in personal tax because the recovery rates just aren't as good. Um, so it might be a good accountant, but they just don't have any experience. And that's what I was saying earlier is, can you ask your current accountant for a referral to someone else who they trust who's good with personal tax? Like me, for example, I was doing over 1,000 personal tax returns. I knew personal tax, but most accounting firms, even the large ones, they only do a few hundred a year, right? They're just not set up for it. So they don't ask those questions. Um, so it's just food for thought for the people listening.
So I know, like, as a lawyer, I do a lot of family law and a lot of corporate law. And so, where I've developed more of an expertise is the combination of those two together. And when you have kind of that allocation, that's all the time I ask, oh, hey, here's this matter. It's on personal injury. I refer it to someone else, just for the same reason. I mean, I absolutely agree. That's such a great question to ask. Have you dealt with, accounting and divorce before and some of the differences or how you should deal with that? And do you have an expertise in that? Because that's going to go again to the value that you're getting from your accountant. Because if they're like, nah, I've never dealt with that at all, and then you're asking them questions, they might miss something that they could deduct because the accountant didn't know that they could deduct child support or legal fees for child support or spousal support collection, or they didn't know that, oh, it's not the entire legal bill, it's actually just the proportionate related to those, not property, parenting, or the divorce itself. So that's a great question that they could ask as well.
Yeah,
Um,
absolutely. No, just and also, if they haven't had a lot of expense or experience in this, they're not going to really think about the after tax effect, right? Like, there's certain things like your marital home not taxable, RSPs. They might say, well, one spouse has 200,000, another has none, and so there's going to be a one-time payment. But are you taking into account things like the after tax benefit of it, right? Because you're used that RSP amount is actually taxable depending on your income. So you could set some sort of arbitrary tax rate, for example. And I would know that because I've done it, but some wouldn't, right? They wouldn't look at it like, oh, well, those RSPs are taxable and this person's high income, for example. So we should, there's no matter when they pull it out, it's going to be taxed at a high rate. So it's not actually, let's say, 100,000 or $200,000. It's much less than that, right?
I mean, I deal with that all the time too with like our DSPs for retirement disability savings plans, can be withdrawn at a separate tax rate, or you can do a T2220 rollover for spousals upon
Hmm.
separation in order to avoid the tax consequence now, except when it's withdrawn, which is a benefit, especially if you have a lower income spouse. where they can then withdraw some of those RSPs right away with less of a tax consequence than the higher income spouse. And I'll use those as dealing with family law as interim matrimonial property divisions and things like that to try to, and I'll talk to accountants to try and adjust, that tax base so that they're retaining the max amount of their property as possible.
Right, exactly. And Matt, actually, I had one question for you too. Is
Yeah.
I was just curious, when you are having someone go through this situation of divorce, are you also making sure that they're updating their estate plan, wills, et cetera, et cetera?
Yes, like one of the interesting things is because it's going to be different by jurisdiction. In Alberta, for example, when you look at divorce, your will is active until you actually get divorced. But in British Columbia, as an example, it's a period of time that you're separated, and then your will kind of removes your spouse as an executor or as a primary beneficiary. So that's one of the things that I recommend people, especially if they're going through a high conflict divorce or they have a high net worth, that they should be looking at updating their wills to make sure that the allocation of those assets are provided in the way that they want post separation.
Right. Yeah. It's just something that obviously um, I don't provide any guidance on wills or estates or anything like that. But I do, recommend that they talk to a lawyer about looking at your life insurance policies, your beneficiaries, wills, estates, retirement accounts, making sure that that's all changed for the new circumstances, right? Just make sure you're talking to your lawyer about it. I find that it's always interesting to me, like somehow it's overlooked. Like you see later on, it's like, oh, it was never done, and the ex-spouse still has claim to certain assets, and then upon death, because death happens, um, you know, then everyone's surprised, right? And so it's making sure that you have that listing of all the assets, all the different things that are there, which the accountant should have, and then making sure that the lawyer is going through that and making sure that nothing's missed, right? Because I don't know
Well,
if you've seen that before, Matt, but I know that I have.
and you know what? Right now, I'm dealing with a case where person passed away after a 4-year divorce, and we're fighting over jurisdiction. And so it's just one of those complicated things because stuff happens and you can't control it. It's interesting you mentioned registered accounts and registered investments because most of your registered investments, life insurance policies, don't even enter into an estate when someone passes away. They just go to the named beneficiary upon proof of death. And so, with those sort of things, they can get access to it right away. It doesn't enter the estate, so you don't really have the ability to fight over it because it's that contract that they signed with those providers, which governs it. And so, it even makes it worse if you don't change the beneficiary on your life insurance policy. You don't change the beneficiary on your, RSPs or your TFSA accounts. That it just all goes to the person. You haven't really put your mind to it.
Yeah, no, exactly. It's one of those things I think that gets missed often. I've seen that quite a few times, actually. It's like, well, how did that happen? But people just forget. Like I said, it's a very stressful time. Have to remember how stressed they are, especially in long divorces and ugly divorces. So draining and just law. I know, Matt, that you hate to hear it, but like lawyers and court, and it's stressful for the regular person to do all these things, right? So stressful. It's so easy for them to miss it. So it's also up to the professionals to make sure that they're not missing things, right?
I always say the role of your professional, is supposed to be a few things, right? One is to take away their problems. Two is to reduce their risk. And three, I'd say, is to be that objective third party that's able to say, hey, you should think about this. Hey, doing that sort of step isn't in your best interest. You really should reconsider how you're dealing with that particular situation. Um, for those exact same reasons. Uh, The other question for you is something that I deal with a lot as a lawyer that kind of jumps into the account realms is in 2017 there was a Alberta Court of Appeal case called Cunningham versus 70. And in that case, what it basically says is that if you have a business, in regards to whether it's a sole proprietorship or a corporation, so whether you're filing like a statement of business activities for your personal income tax return, or whether you're filing, your separate income statements or financial statements, you have to provide a not just that disclosure itself, but a reasonable explanation as to what the benefits and expenses are deriving from that financial information. Now, the reason for that is so that the other party, and typically if one person runs the business and the other person's a stay-at-home mom or stay-at-home dad, that they might not understand any of that. And so those explanations help kind of narrow the playing field, and it helps restrict the ability of people who own businesses to hide money within their business, right? To avoid the split on separation. And oftentimes, again, depending on the sophistication of the client, I get things where I just ask my accountant and I go and I talk to the accountant. The accountant's like, hey, look, they just gave me a shoebox full of stuff, and so I'm not, retained to deal with this. I'm just doing financial statements. I'm not providing, it's not like an audit where I'm providing an opinion, uh, and they have to work out something. Have you ever dealt with that kind of process?
For me personally, no. I've never had to give opinions on any sort of items, and I wouldn't, because I think it would open me up to potential legal issues. Although I do think that it would be fine most times, but I wouldn't feel comfortable with it. I would say that a lot of the time the accountant's getting the information or notice to readers or compilation engagements. My apologies. And with those, you're not giving opinions. So the financials, um, really the spouse would have to come up with the explanations. They most likely, it depends on situation by situation. Yeah, there are times where client is bringing you um, bookkeeping records. Sometimes they just bring you a shoebox, right? um, Still, for explanations on line items, I think accountants need to be cautious. I think that information would come from the spouse. And they should be able to, if they have a good accountant, explain all the different things on on their income statement, for example. There shouldn't be any surprises, right? On their GL, the client should know what all the expenses relate to, right? So I have had, your original question was, have I dealt with it? I think a lot of times what happens is clients will say, hey, I need my last 6 months of this. They know I have it because at the time when I was in public practice, I would have that information on file. So I would just give it to them. Like, oh, I need my last 3 years of this. I need my last 3 years of this. Yeah, no problem. Send it over to them. And that's more likely to have happened in the past for me, but actually giving opinions on line items, no.
The one thing too is, if they have access to the general ledger, then they'd be able to say, look, here's everything that goes under this line item. And your client would know what those receipts are because they're the one that gave you the receipts.
100%. Like the client is going to know more, uh, even more about what those receipts were a result of, right? They were the one that actually spent that money at that time. And obviously, it's hard to go back and remember those things. But yeah, if you're requesting a general ledger, it's not hard for you to grab it. If the accountants left good notes in the memos or in the comments area, depending on which program they're using, you should have a pretty good understanding of, well, they went to Canadian Tire and it was supplies, or they went to, you know, uh, they went to Esso and it was fuel, and hopefully they have somewhat good organization. You could ask for copies of the receipts, or you could ask for the GL and the receipts, and you can go through if you're really wanting to and make sure that everything is what they say. That is an option, very timely option, but that is definitely something that could be done.
If you're just doing a notice to reader, though, you don't know whether that fuel is used for their camping trip or they're, driving out to Fox Creek or some other place to do work.
I mean, yeah, I mean, there's still a duty to make sure that you're not filing statements that are most definitely incorrect, right? Like if you see someone and they go from 1,000 meals and entertainment to 30,000 in a year, and the remaining expenses and things don't seem right, you're going to be asking them about that, because that doesn't seem like, in this case, fuel. So fuel goes from 1,000 to 20,000. You're going to say, well, where were you driving? Were you, you're also asking that to make sure that if there's a personal component versus business component, you're making sure that you're picking that all up, for tax purposes, right? So, but to your point, yeah, mostly you're taking the information, as is, and you're putting it in, right? That is compilation.
So, that actually brought up a great question that a lot of my clients deal with too. So they have a business, and one way around kind of adjusting for that personal expense component, say it's a home-based business. Um, they and so they might, for example, take a certain proportion of their business expenses, say their mortgage on their home or their utilities on their home, their
Utilities,
internet on
property
their home.
taxes, yeah.
Yeah. What percentage, when you look at that kind of generally is common for those home-based businesses?
Oh, well, yeah, I mean, I think that 10 to 15% is fairly common, not too aggressive. I think it's always concerning when someone says, "Oh, well, my whole basement's been converted, 50% of my house." Use that as an example. Is that really reasonable, right? Do you actually have people coming over to your home for business purposes, or is it just one big office that you put also a wet bar in, And so I think it's kind of a professional judgment, if anything. And the correct answer is to make sure you measure out the square footage of the room that is your office, right? And compare it against the total of your house. And that will give you your percentage. A lot of times people give estimates, and some accounts will just accept those. And if they did, the range 10 to 15% seems reasonable, but in some cases it's much less, and in some cases it's more, especially, if they're like a photographer with a series of studios, right? And then it could be higher potentially, right? So I guess it depends, but I think generally speaking, I've seen 10 to 15%.
It's kind of a common number. No, it's, yeah, and you mentioned that too, because I've dealt with clients on a legal end where they're masseuses, and so they have like a main floor is this business area, and then they have kind of a blocked off area going up to the upstairs, just more of the living area, or things like that, where they run it out of their home that way. I see a chiropractor's office actually the same thing, where they just ran it out of their out of a home.
Well, there's lots of home-based businesses. There's salons, massage parlors, acupuncture. Like, I mean, lots accountants. There's lots of legitimate businesses that operate out of the house, that do require people coming to the homes, and might have like a waiting area with furniture in it. But then you also get the people that are, oh, well, I work from home and I'm a financial analyst and I bought all this furniture. Can I write it off? Well, you know, are you having people over? Is it actually an entertaining space? Is it a waiting lobby? You know what I mean?
Yeah, yeah. No, I ran into that too. Same thing too with garage storage. Oh, I'm storing all of this stuff, in the garage. So that should, square footage should be included in the overall amount. Or, oh, the medium cost of renting the garage, if I had to get a storage space for this, is this massive number.
Yeah, but
When you,
then what's the point of that? It's an expense, right? They're like, well, it should be counted. It's like, okay, well, that means you're charging your personal home, you're charging rent for that area to get the expense in the company. So the income is just getting moved to yourself personally and opening up to be considered for business use and not just personal use. So is it really worth it?
yeah.
Like,
No,
I like, that's how it's all in the risk of the client.
yeah.
I mean, I explain it to them, like, just like how I explained it to you right now. I mean, is it worth it? Like, is that going to be an issue? You see that on farms and other things like that, where I own a business as well, and I want to I'm a welder and I want to have a fab shop. It's like, okay, well, you want to build it right on your qualified farm property or your personal residence area. Like, you know what I mean? It opens up issues, which is, outside of maybe our topic that we're talking about today, but definitely interesting stuff for sure. Anytime you're mixing business and personal, it gets a little bit more complicated.
I always think too, the risk of an audit, and then once you get audited once, the likelihood that you're going to get audited again, especially if they find something.
Yeah, I mean, theory would never obviously say that they do that outspoken, but I mean, they usually start with a payroll audit because you mess up your T4s, and then all of a sudden they're doing a GST audit, and then next thing, you know what I mean? Like it just, yeah, the yeah, the best thing, like you said, you just want to do things right, um, file on time, pay your payroll remittances because that is how our government funds our cash flow. Right? Don't be late on it on the business side, and stay on in the good books. You're absolutely right.
Well, I mean, CRA isn't stupid either, right? If they see smoke, they think there might be fire there too. And so as they go through it, and if you're trying to, you know, add a whole bunch of stuff onto expense lines that shouldn't be there, as you said, they'll go through the list and they're like, oh, well, if there's this mistake here, well, let's start looking at previous years too.
100%. They're going to look at the one-off years, right? If there's a huge increase, like as an example, but not a personal experience. But if you had, let's say, big legal fees on your personal income tax return, you better have the supporting documentation because there's a good chance that they're going to say, well, we want to check this out. You probably don't have $50,000 in trying to collect spousal fees, for example, right? And they're going to go and say, well, your total fees were 55,000 for the whole divorce. This can't be reasonable, right?
No, and that's
So
yeah.
yeah, exactly, right. So I mean, it's just to your point, making sure that you are doing everything right, making sure that you have proper documentation on these big changes that are happening, right? Making sure you have um, your divorce agreement, any court orders, like for spousal support, for example, because that's deductible, and they might say, "Hey, we're going to check your spousal versus child support payments to make sure that you're," because one is deductible and the other isn't, to make sure that it's been done correctly, right? So making sure you have that information readily available for your accountant, so you can just submit it when needed, um, is beneficial.
So as a accountant, you want that information. So you want the court orders that deal with child support or spousal support.
I mean, yes and no. I mean, it's not the end of the world if you don't have it, but when I was in practice, my rule of thumb was just to scan everything, right? It was the more information, the better. The more information allows me to make sure that the tax returns were done correctly, right? And so, yeah, I'd say it's good even just for your own sake. Something happens and goes up in flames, your accountant has a copy, right? Or hopefully.
I can't stop myself from laughing because you're like, oh, as an accountant, having more information enables me to file the most appropriate tax return for someone and be able to best represent them. And I'm like, shock, surprise, as a lawyer, having the most information possible, enables me to represent them and provide their best interest and think about all the different strategic possibilities from a legal perspective, as much as possible.
100%, like the good, the bad, the ugly, right?
Yeah.
I just want to know, right? I just want to know. Just give me the information. Just
And
give it to me. I want to know if you bought that, whatever you bought. Like, just give me all the information, right? I want to know.
I got kind of one final question for you that's a bit unrelated, but I'm just interested in your opinion. So, as someone, if you are a new articling student, you just started, what tips would you recommend for that new articling just entering the practice of being an accountant?
Oh, the best advice that I would give to a new articling student is that I would say make sure you're going to a firm that is leveraging and utilizing technologies, because the technology change is coming. I worked at Stamped AI, which is a platform that is going to automate year-end returns, about 70-80%. It's not a matter of how, or it's just a matter of when, right? Like it's just when is this going to happen, right? Like, it is coming. So you will have a job, but you need to make sure that you're utilizing all the newest technologies. So if you're at an old school firm and they're still using the oldest programs and they're not adapting to technologies and they're not progressive, it's a bad sign. You want to be in the place that is going to give you the best learning experience for the future. And the future of all professionals is changing rapidly, right? AI is doing a lot. Um, and so it's important that you do that. And then the second thing past that is that I would say be a sponge, right? Don't be too good for anything. Take on as much as you can and try to, if you can, depending on the firm you're at, I know it's hard at the big firms because they just have you work on usually one or two things in an audit. But if you can take on more and more work, you just become more and more dangerous. For example, I had a really great experience when I articled at a mid-sized firm here in Edmonton, and I did everything, compilations, reviews, audits, some US tax, some valuation stuff, some special work. And because of that, I learned a lot more. And in the beginning, when you're grinding, it's all about learning because you don't know anything. You think coming out of school, you know something, but you know absolutely nothing. There's something to learn every single day in accounting. You need to be open to learning every day because there is something I have learned something today, Matt, right? And I will learn every day that I am in the profession. And that's just the way it is, right? And so my biggest advice is one, embrace technology, look to the future, think about the future and how you will fit into that accounting future. And two, make sure you're a sponge, park your ego, you know nothing, go and learn. And talk to these business owners. Like, it's very rare that you're in a profession where you could have access to business owners, right? High income people generally that are really sharp and know their stuff, right? It's a really good way to expand your network and learn a lot from them because those personal experiences they have within their businesses can lend you a lot of knowledge for when you do whatever, start your own practice, go into business, go even into industry, right? If you're trying to get into controller or CFO or leadership position, those experiences that you learn, the mentorship is massive. So find a good mentor as well.
Much for your time today. Really appreciate it. Learned a lot. And again, best of luck.
Matt, it's always great seeing you. Thanks so much for having me on. I hope you can have me on again sometime, and hope you're doing well, and we'll see you again soon.